boy, could we do with 0.5% inflation in Nigeria. We're at 12.4. We'll be discussing that later. The federal government of Nigeria has assured a coalition of private sector operators of a 65 billion naira stimulus package. This is to assist them as they face the long-term effect of the COVID-19 pandemic. The development was disclosed by the Minister of Industry, Trade and Investment, Ayodeji Ebo, at a recent virtual meeting with the organized private sector. The minister noted that the government was ready to assist them because of the role they play in the economy. The proposed interventions include 50 billion naira in survival funds for MSMEs, micro, small and medium enterprises, and a 15 billion naira guaranteed uptake scheme to save 500,000 jobs, 40% of which will be reserved for female-run businesses. Nigeria has been tipped to dominate the global economy in the possible future. This as the world population is likely to shrink after the middle of this century, triggering shifts in economic power. The new report says there will be around 9.7 billion people on planet Earth by 2064, but that number will decrease to 8.8 billion by the year 2100. The analysis says that improvements to modern contraceptive methods and the increasingly widespread education of women could be a catalyst for a decline in global fertility rates. The study also predicts a major shift in the way age is distributed throughout the global population. That, according to the report, means that populations will not be sustained at current levels without a more liberal immigration approach. Managing Director of AfriInvest Securities, Ayodeji Ebo, joins me now for his perspective on these developments. Good morning to you, Ayodeji. Welcome to the show. So let's start with the stimulus package that's been promised to the private sector. That's, the SMEs and the like MSMEs need. Is the number enough? How do you gauge the amount?
Yeah, if you look at the amount relative to the size of the Nigerian economy, it's significantly below 1%. So that's just like a drop in the ocean. So I feel that there's even on the part of the CBN, there's been a lot of intervention funds. Yes, it's a positive development, but there's a need to take us to. We also need to now focus more on creating that enabling environment to attract private capital. So as government is trying to support, the private sector guys should also be comfortable to support. It means most of the real sector has to be the rigs, there has to be good infrastructure, there has to be power, so that most of their businesses will be profitable, and even banks will be more comfortable to lend to most of these SMEs, so they won't have to always rely on the government. It's relying on government for intervention funds also should send also a concerning signal that maybe the architecture or the structure is faulty. So if we don't take care of that structure such that these firms on their own can attract private sector capital, especially from the banking sector, then then I don't think would achieve so much with some of these interventions. 65 billion relative to about 36 trillion naira GDP. That's GDP. You can see that is really very small. Yes, it's a positive development for their support, but if we look at the focus of the growth we want to achieve, then I think we need to look at what other parameters or variables can we put in place to ensure that we attract private investment.
Well said. Thank you for that. Where would you target these funds if you had the choice? Real estate has been in recession. I think trade as well. Would you, if you could allocate, what sectors would you try and, pump the money into?
I think I would start with trade, which is mostly the informal sector, but a lot needs to be done so that those funds can also be repaid. Then you also want to look at manufacturing based on their contribution to GDP and employment. It's also very significant. Yeah, so agric has been overflowed. If we don't work on the structural issues in terms of mechanization and some of the value chains, seeing how we want to really put more effort on that, then we won't achieve. We'll just be spending the money when you see yield per hectare within that space if we don't work on the seedlings so that we can increase our outputs. Then it will just be like we're throwing money down the drain. So in terms of ranking, I would start with trade, which covers more of the informal sector and a significant part of more than 60% of employment.
Okay.
You look at manufacturing too, then we can also consider agriculture.
Fantastic. Thank you for that. Yield per hectare, that's also a very good metric that we need to be focused on for the agri sector. Let's take the other story about this report that suggests that the balance of economic power might shift to sub-Saharan Africa because of population trends going into 2064 and then into the next century, into 2100. I don't know, if you look at GDP growth versus population growth in Nigeria, do these reports worry you as to how we may be able to support these large populations in the years to come?
No, it calls for concern. So if you look at the GDP per capita per annum, it's about $2,200. So you see that with the current inflation rate and even the projected inflation rate for the next 3 years above 10%, it means that poverty rate would increase, and there's a strong correlation between poverty rates and crime rates. Then if you also want to throw unemployment into that equation, so it really calls for concern. If we have not, our population is still at this level at over 200 million, and the security level is really worrisome. So we don't want to imagine what it would be if our population, based on projection in 2050, moves to about 400 million. But population shouldn't be, in the right sense, shouldn't be a downside or shouldn't be a cost, if I put it in that way. But we just need to harness the opportunity. So, typically what we have now is most people, they know the market is here, but they prefer to set up their factories in Ghana and import the goods. So we need to be deliberate about, they can see the opportunity, even the foreign investors, but they are not willing to go through that stress of manufacturing in Nigeria. They prefer to bring in the finished product because of the bottlenecks that they will get from transporting power. So the cost of producing is relatively high in Nigeria relative to neighboring countries. So these are some of the major focus areas that I know the government is aware of this, but we need to put more deliberate effort to see that we begin to see results. Power, we have deferred the cost reflective tariff. What is the opportunity cost for that? Have we done our assessment to look at the opportunity cost of deferring that? This road infrastructure, I know the minister for works and housing, they are also trying to do how they can concession about 10 roads for a start. So if we can improve our efforts regarding that, then we would begin to attract those industries. Once they come here, they see the market is here, which is the strength that the population should give to us. Then they will be able to generate employment, and at the end of the day, we can be able to grow to that developed economy level where you can see.
Thank you. Your point is well noted. I appreciate we've run out of time, unfortunately. Ayodeji Ebo, Managing Director over at AfriInvest, taking us through those stories there. Thank you, sir.